Good morning, starshine.
Welcome to the real world. Whoa!
Mortgage your house and buy Bitcoin with.
Breathe air.
There is no second best, okay?
GM. All right, so today is Wednesday, 7th of August, trade of the day, and I want to look at Bitcoin impulse candles. So where am I looking at here? It is over here. All right. One of the reasons why I think Bitcoin can go quite a bit higher on this current phase is using the impulse candle detector, which is an indicator that's available for blue belts and above. And I talked about it here in trading analysis. I copied the description in for anyone else who wants to understand how exactly it works. There. This is a way to determine the true impulse behind a specific candle based on volume, average true range, candle size, and the candle size, and the body to wick ratio. So it's obviously explained for anyone who has the indicator in blue belt or above. But what it means and what I use it for is to understand very strong moves on whatever time frame. So this is an abnormally strong candle for those metrics. It had, the way I have it is, I actually have it set even higher. This candle had double the average volume of recent candles, so 2 times. It is double the range of previous candles. It has a body to wick ratio where there's majority body indicating strength through it. So you can see this next one. The reason this next one here isn't orange is because there's really long wick. That invalidates it. And then the average true range, ATR. So the way I use it, and from my testing, what has been most reliable is usually, if you think of it almost a bit like an order block, if price is going to be bearish, it tends to reject quite aggressively off the candle as soon as it hits. The reason why I have this shaded in green is that Bitcoin is trading inside of it and trading through it. That tells me this candle is very unlikely to be where it tops, at least based on the historical tendency. I'll show you a couple of these, for example. Here's an example of a bearish one. All right, you have your bearish breakdown impulse candle. Price comes back up into it, immediately rejects off it, right? Big long wick up into it, pushes back down, and then consolidates below it, is unable to trade inside that range, showing whatever this heavy selling was that caused this candle to be an impulse candle has continued. And then what happens? We go lower. An example here, this really strong sell-off candle, it was quite a bit longer until we came back into it. But when we come back into it, look over here, price did not reject. It came inside and traded through it and drifted through it. And what happened? It went significantly higher, which is a little bit like what we're seeing right now, which would tell me we'd probably go a bit higher. Over here, very strong high volume impulse candle. As soon as we come up to it, big wicks, reject. No trading inside of it. Bitcoin's price rejects, it acts as resistance. What happens? Price goes back down. I think I have a couple more examples here. Yeah, here. Here's an example of initial rejection. So strong impulse candle, initially rejected off it, but then we come back up into it and start to trade through it. Traded into it, got beyond it, and price continued higher. And I think there's one more red one. Yeah, there we go. There's a nice one. Big bearish breakdown candle. Soon as price touched it, rejected immediately. Came all the way back down. So if you have the indicator, it's one of those things that's good to go and test. But for me, right now, I see this and think, okay, Bitcoin is not respecting this as a bearish candle. It first tried to reject it on Tuesday. So that could have been the rejection. Instead, pumps back inside, consolidates, holds, trades through it. So that would tell me, just based on that, continuation is more likely. And I would expect that Bitcoin, it probably can continue to trade in here, right? It's not like it's going to just moon right away. But I would say it probably can make its way through that. Now, maybe it goes up and hits the one above, right? You know, the whole thing about probabilities is the way Bitcoin is trading. So the price action through this candle currently tells me that Bitcoin will go beyond it. It doesn't mean go long specifically. it definitely means don't short. I would definitely not short while price action looks like this. Bitcoin is moving up with lower volatility, squeezing and compressing. That's all the things you want to see for continuation, right? Whereas pullbacks, but they're getting bought up. And it's pulling back, but it's not pulling back. And now it's pulling back, and any pullbacks are just small. That's probably building up to go somewhere higher. Maybe it just gets straight up above and immediately rejects. That can happen too. It only tells you it's going to continue beyond the green box. We could touch, maybe this is the really strong selling around 60. Maybe it looks amazing, breaks out, and you're like, holy shit, what a big breakout. But that candle has pure rejection, and we go straight back down. This is where nothing that you see tells you that it's going to go like here. If you're trading through levels, it's strong until it reaches the next level. Same as on the downside. You never know where support's truly going to come in until it forms. So anyway, how I'm looking at this today and in the days ahead, continuation is most likely, for sure, at least beyond this. And I think we do get 58k. Obviously, we're very close to it already. That's quite clear. But I do think we get that touch, as I mentioned last night. And I think probably we can move to 60. And also, depending on how that acts. So what I'm looking at here is, if we move up and we do reject off that candle, how does this one act? Does this one act as support? And if we start to trade back inside this one, that's where you're probably going to see a bigger move up before any kind of next decline. And the higher it goes, the higher it can go, because it starts to build up structure and squeeze and squeeze and squeeze. And again, like I said on daily levels, all of this does not mean Bitcoin is suddenly, we're okay, we're out of the woods. No, quite the opposite. It can actually just be a big, sharp rally before a complete collapse. I mean, we saw it here. Big rally up. Trump's back, fucking Trump pump. And then what happens? It just unwinds all the way down. So be careful and understand. You're talking about probabilities here. If it respects this candle, right, we will go down. If it disrespects this candle, we will go beyond it. That only means it goes to the next level, which is 60. If it doesn't find resistance at 60, it's going to go higher. If it doesn't respect that, and then at some point, that resistance can come in. You're trading through levels. You're not saying that, because it breaks 58, it has to go to 70. No, there's a lot that has to happen in between. And that's where you're combining your time frames. Higher time frame, lower time frame. And don't forget that. Everything I'm talking about here is like lower time frame stuff. This is how I'm going to scalp or day trade over the next several days. So absolutely zero. I have zero reason to short at all. Don't short these slow grinding, after a leverage flush, and it's just grinding. Don't short that. Don't short it. If you're going to short, wait until there's a sign of actual weakness, right? Like, there's your weakness. Price tries to go higher, fails, comes back down, breaks some structure, rolls over. You're looking at it now, up. It was going up. Now it's likely going down. That is when it starts to look like a next decline. So, that's about it for today. That's my current daily level, current trade of the day. This week, there's not really much economic data that's going to release, so it's mostly just going to be trading the price action. I'm also keeping a close eye on stocks, watching how they're reacting. Stocks have not bounced as strong as BTC. Obviously, stocks are still doing okay. You can actually see here that the S&P came up into an impulse candle and rejected off it initially. Right, so there's not what Bitcoin's done, right? Bitcoin has come up and traded inside. S&P has rejected at the first real strong sign of resistance. If it's unable to get in that area and you start to see it roll over, especially there, if it starts to break like that, well, that probabilistically is going to be back to the lows at least, if not new lows. And if that happens, you want to be looking at what happens to BTC or what happens to crypto if stocks go lower. The correlation is not always perfect. And so obviously I think the same thing for the S&P. It needs to trade inside of here and probably flip this level to have more upside potential. So it's at a key point, turning point here. So we've had Monday. Monday actually started off with selling, but the New York session on Monday was here. So New York session was green on Monday. New York session was green on Tuesday. And we're sort of grinding. If we have a Wednesday session that is sideways, be careful and watch for Thursday, because Thursday can often be the turnaround of these post-crash rallies. Sometimes Thursday can be where people step back in and decide to sell into the weekend again. It's like you have the fears on Monday, right? And then the market rallies Monday afternoon. And people start to, oh, maybe it's not that bad. And then Tuesday, you have more green. Oh, okay, maybe we're okay. And then it starts to slow down and slow down. And as it stalls out and slows down, people start to think of the bad stuff again, which is where you can see a continuation. And again, don't forget, S&P, NASDAQ, these are bearish charts currently. On low time frames, they're bearish. Huge gaps above where it could obviously grind higher into, but they are in bearish setups right now. So that's where we're at. That's it. Trade of the day, GM. you.